Welcome once again to this beautiful section. Today we will be discussing, I'll be teaching you on technical analysis. There are about three types of analysis in the forex market. There is the technical analysis, there is also the fundamental analysis, and we have the sentimental analysis. So we have number one, the technical analysis, the fundamental analysis, and the sentimental analysis. I'll be taking you through all this process in different video series. So I'll advise you stick around, subscribe to this channel, turn on the notification bell so that you will always be updated on um, on our videos when they are dropped. Okay, but today we're going to be focusing on technical analysis. We want to know how to analyze the market, how to understand the market, how to make our predictions, and how to get good entries that will make us profitable. You understand? The market speaks its own language, and it's our job as traders to understand the um, language of the market. And one of the way the market communicates is time and candlestick. So the market communicates through different process. This process occurs through time, they occur via candlestick, and it occurs via nature of price movement. Okay, so one of the first thing you see in your chart is you notice that you see the candlestick in your chart. They are either moving up or down, and you notice that they are the green candles and they are the red candles. Every candlestick consists of both the body and the wick. The wick tells you of past actions of price. The body tells you of the strengths of either sellers or buyers. Um, uh, but today we'll be looking at a very unique topic, and that under technical analysis, and that topic is support and resistance. Support and resistance. The market does not just move in a linear direction. No, market does not move in a linear direction. The market moves in the market moves in waves. The market moves in waves. It does not move in a linear direction. The market moves in waves. So, like I said earlier, the market does not move in a straight line. The market moves in waves. You can see, for instance, the market started here, take this down shape, went up, went down, went up, went down, went up, went down, went up, and then down. So the market does not move in a linear line. It moves in waves. So when the market goes up, you should always expect at some point in time, remember what I said, at some point in time, you expect the market to calm down. Okay, so but today I'll be teaching you different techniques on how to trade profitably. Now, first thing I want you to understand in the first market is that there are forces that brings the market down. Just like forces of gravity, there are forces that does not make the market to continually rise up. Okay, and whenever price respect those forces, the movement of price is negated, the movement of price is halted, price begin to fall. Let's say, for instance, price was at this position here, it traveled through a linear line and then get to this position and then stopped, then fell a bit, rose to this point, and then fell down. So something is opposing the movement of price at certain points in time, and that force is an invisible force that occurs at a certain range in the chart. For instance, if you look at here, okay, let me get an arrow. Look at this position here. Okay, the market was initially moving up and then drops down. What happened there is that the market was traveling, price was going up and then hit a zone. Remember, I did not say line, a zone, and that zone is called a resistance zone. I repeat, If the market is going up and suddenly start dropping down, that point, that area that it hits is called a resistance zone. So this area here is a resistance zone. So anytime price hits that zone, price is expected to begin to drop. So what happened when the price get to this zone? Okay, I want to use something else to draw this zone, to mark this zone. Let's use our okay. Let's use our let's get our tools. Go to our tools box. This is your tool block box. Get your objects. So let's use this to identify the resistance zone. So this area that is marked green is your resistance zone. So price moved from here, reached here, and this is my resistance zone. Price could not penetrate the zone. Whenever price cannot penetrate a particular zone, price will begin to fall. So price falls down to gather strength. It went back up, met on a minor resistance zone, fell down, ranged a bit. That's what they call range, is when the market is not making a particular when the market is not going either up or down. It's called a range. The market makes three kinds of movements. The market will either go up, will go down, or it will range. So this particular stuff here is the market ranging. At this point here, the market is neither going up or down. It's just at a particular spot making candles. This was called a range. So when the market moved up here, there was a stand zone here. It moved down. It went up, hit this major zone, fell down, made a small range here, went up, made a different range here, then pulled up. What happened? This same zone reacted, pushed the price down, but it could not push the buyers, the seller. It could not push the buyers down enough. The sellers could not push the price down enough. Buyers still took over the market, broke the resistance zone, and then went up. Let me repeat again. Let me repeat again for understanding. So this is our resistance zone. This is the zone that initially stopped price. So price came to this zone here. It could not pass the zone. Buyers could not lift price above this zone. So sellers took over the market. They dropped the market to this point here, took it up. At this point here, buyers and sellers were at similar strengths. There was an indecision in the market. Neither buyers could drag market up or sellers could drag market down. But after a lot of tussle here between buyers and sellers, price buyers pushed the market up, back to this zone. This zone still at some point still resisted buyers from pushing price up. Sellers took over briefly and then lost energy, lost strength. Buyers took over and broke the zone to this point, point here. Understand? So that's how that's how to understand what happened in the market. Understand? The first zone to watch out for is the resistance zone. So if I ask you now, where are the resistance zone in this chart? You can simply just mark them here, 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 and here. So resistance zone are zone that stop price from going up. Okay, that is resistance zone. When price is trying to go up and then suddenly goes down, that is your resistance zone. Now there's a different zone that is called support. That is the zone that prevent price from continuously going down. Okay, that zone is called the support zone or support region. For instance, we have this area here is your support. This area here is your support. There's an invisible area here. You can see this area here. You can see how this candle rejected here. Whenever they got to this place, they formed a long wick. So here is a support zone. You can see that this support zone stopped. This was also stopped in this movement of this candle here. Let me use our tools to draw it very well. Um, our tools. Okay, you can see the zone here. Okay, perfect. This is the same zone that prevented this particular candle here from going up. The zone prevented price from going up to come down, and then this is the zone. Now, when price is under, whatever force it prevents it from going up is called a resistance zone. When price is on top and trying to go down, whatever zone that prevents price from going down is called support. So invariably, resistance can become support, and support can become resistance. It just depends on the price position where price is at a particular time. For instance, now this particular zone here, if price is trying to come down, this zone becomes support. Formerly, it was resistance at this initial point here. When price was here, when price was here, it was resistance. But the moment price went up to here and tries to come down here, this zone also here becomes support. So it actually interchanges. Price support can become resistance. That can also become support. It just depends on the area of price. When price is going down, whatever zones it meets, that zone becomes support. And if its price is going up, whatever zone it meets above it is called resistance. I hope that is clear. Now, one thing I want you to understand that not every zone is a valid zone. Not every zone will stop price. Not every zone will stop price. And something I want you to also understand is that if a zone is tested or if a zone is being touched multiple times, for instance, this zone here, when it was touched the first time here, price fell down or price came down, and then when price came to this zone again, price, even though price reacted a little, it could not. This zone could not hold price. Price broke the zone. So at certain points in time, not every zone will hold price. Some zone will hold price for a while, and then after a while, that zone will get broken, and then price will definitely uh, break that zone. So some zone can actually be divided into whether a weak zone or a strong zone. So we have two kinds of zone: a weak zone, or a weak support, and a strong support, or a weak resistance or a strong resistance. So there are weak zones and there are strong zones. The question now is, how do you find strong zones and how do you find weak zones? You're actually gonna find weak zones on smaller time frames. If you go to 5 minutes time frame, you can still find your support and resistance. Here, like here is your obvious. Here is your obvious. Sorry. Okay. If you get to this, if you get if you get to this, sorry. Here is an obvious support zone, but all the support zones are weak support zones because they can be easily breached by price. One can easily break all these zones, and then they are not good zones to trade. Some people trade support and resistance zones. So zones in smaller time frames are easy to break. So they are not reliable for trading. So if you want to get good zones for trading, you go to higher time frames like the 4 hour time frames, 5 time frame, D1, MT, M1, 1 month, 1 week. Those are effective zones. For instance, let's give an example. Let's say, for instance, now look at this trade I'm trading right now. This trade I'm actually on right now. I'm on, okay, $54 profit. Now, why how did I enter this? Why did I enter this particular trade? As for example, I first of all identify my resistance zone. Okay, this was this was um this was the resistance zone when price was under. Okay, this is actually a strong zone. Okay, and secondly, this is another zone here, a support zone. You can see the zone. You can see how when price reacted at this area here. You can also see it here when it became this support zone here. This one became resistance when price was up because price went up and touched here and then moved up. So when price came back here, this area becomes um, a support zone. Understand? Let me repeat again. First of all, let's look at all the places that price reacted. Okay, here price was going up, price went up. Let me use an arrow. Okay, sorry. Okay, price went up here, then came back down. So this is a zone. Okay, if price was under it, it's called a zone resistance, but now price is above it. So this was a zone. So this was a support zone. You can also see this week here, this 1 week, 2 week here, telling you that this area is a zone, this area that existed price for a while. Price was existed here around this point. So if you also go further, you see that when price broke here, when price broke here, reached this support zone, it came back down, hit when price broke, hit this resistance zone, it came back and hit this support zone here, and then it's from support zone it's now put up here. So here is a very strong support because price and that zone has reacted many times. You understand? When price has rated up to like 3 to 4 times at the particular zone, that zone is a very valid zone to trade. So what did I do? I came and put my buy limit order around this area here. So I know that if price picks my order, it will reach this zone and then it will start going up back. That was my analysis. You understand? I just knew that since this zone has always provided price, it's actually a very strong zone. So since price is above it, if price comes back to this zone, that will now become, that is now support. Remember, I said if price is above it, whatever zone that price has passed before becomes support. So if price come back to that zone will definitely hold price and push price back up. So I put my buy limit order here, and then I put my stop loss below this area here. You can see my stop loss here. So I know that this area is area of this is the zone area because of how the candle reacted. So what then now happened? You see that price came down with full force, with the full momentum, momentum. It dropped down to exactly this zone, and then it started going up. So if we go down to 1 hour time frame, because this see what happens in one. Let's go to 1 hour time frame. Let's see 1 hour time frame. So you can see the 1 hour time frame. So it hits this zone, and it begins to go up. My TP is just here, exactly here. So that's exactly how to trade support and resistance. You look for good zones that you have actually had multiple reactions confirmation. There have been multiple touches on that zone, multiple reactions on that zone, multiple rejection on that zone. Then this is the kind of zone you trade. And those zones must be on a higher time frame. Time frame like H4, 1 month, 1 week. Those are zones, those are areas, those are zones that will hold price. They will help if you're using buy limits, they will help reject price. If you're also using sell limit, it will also help reject price. So don't confuse them. Support is always above. Support are forces that stop price when price gets to them above. So the support is always, sorry, resistance is always above, while support is always below. If price gets to, if price is going up and it gets to a particular zone, then it starts reversing. That area, that zone above it is called a a resistance zone. But if price is going down and then it meets a zone that reverses its price, that reverses price, that changes its direction from going down to start going up. That zone is called a support zone. So support is like the ground, and resistance is like the ceiling. So that's how you just look at it in your chart. Support is like the ground, resistance is like the ceiling. Understand? So I think that prevent price from going either up or down. And then I'll be teaching you more how to trade support and resistance. But basically, the support and resistance areas are areas where price rejects, where price is being rejected multiple times. Like for instance, said earlier, here, here, here. All these areas that rejected price movements from either going up and or down are your support and resistance zone. Then even if you go back in time, you can see that this area here are your support and resistance zone. The ones above are the resistance, the ones below are your support. If price is below it, it changes automatically. Your resistance can be your support, depends on the price position. You understand? If price is above, your support becomes the ground, your resistance becomes above. If price is above, it changes automatically. So what resistance can become support and support can become resistance. It just depends on the position of price. So all this, so all this area you see that price changes are these your zones, and they are very vital in trading. So I just want to talk about today about support and resistance. So that you ask your questions on the comment sections, you ask questions in my DM. Then tomorrow we'll talk about trend lines, higher highs and higher lows, and different things that happens in the forex market. But today we are just talking about support and resistance, and we're not going to complicate matters with the different subjects because I don't want you to get confused. I want you to understand what it means to trade support and resistance. Some people just trade. Some people don't trade different things. They just trade support and resistance as their major strategy. Some people just buy when price gets to a support zone, they buy. When price gets to a resistance zone, they sell. That's how some people just trade. They don't trade too much complexity. They just trade whenever packets to a resistance zone, they sell. When packets to a support zone, they buy. That's how some people just trade, and they have mastered these techniques that it works for them. You understand? There are different strategy. As a trader, your own just to trade. Look for a particular edge, particular strategy that works for you, and then perfect it. It is even the perfecting that is the difficult part of it. You have to perfect it, perfect both your emotions that are around that strategy, perfect the techniques around that strategy, perfect your entry around that strategy, because you can't just enter anyhow. Even though you know that you know how to enter, you have to how to trade your strategy. You have to perfect how you enter the market around that strategy. So, as I said earlier, some people just trade only support and resistance, and it works for them because they have mastered how to trade it. If you go to D1, you can see D1 has more solid support and resistance zone. You understand? You can see that if you go to the price will always try to repeat itself. For instance, look at this zone here. Price created this first uh, price moved from here to this position here, came down, came back to test that same zone. You see how this place again now fell down. So price will always try to repeat its action. It's always try to test zones that it once touched at reversed its price. You understand? Look at this zone here. This zone here, you can see it here. This zone price went up here, came down, broke it, came back, turned it to support, and still went back up. So that's exactly how price behaves. Price moves in zone, and if you can master how to trade support and resistance zone, you'll be very profitable trader. It's not easy. It takes time to master, but once you practice over and over again, you begin to get the hang of it. You can see here. Here was a resistance zone when price was under it. Price broke it, came back and also made that a support zone. So that's exactly what they are around you. They are always around you. You see here, price moved from here. Here was a resistance zone. Price came down. Price moved up. That area still stopped. So someone that took a sell here around this place would have made this small profits around this area. You understand? And someone that took a buy entry around this area when price came to look at this zone here. Look at this zone here. This is a support zone. Someone that took a someone that knew that this area was a support zone, took a buy entry around here, would have made all these profits because they knew that this area is a support zone. So if price come back there, price will reverse back going up. So that's exactly how to trade it. Okay. For instance, this area here this area here is a support zone. So price came back here, went up. Someone that patiently waited for price to come back here would have entered the buy and made all these profits. So that's exactly how to trade um, support and resistance zone. When price reacts at a particular place, creates a new resistance zone. Price will often come back to that zone, and that zone will still reject price, and then it will fall down. Sometimes it takes about 5 to 6 touches for a zone to be broken, mostly if that zone is on a higher time frame. Some zones are weak, some zones are strong, but most of the times you need about 3 to 6 touches for the zone to be broken. It doesn't mean that it's a constant. For instance, look at here. Price touched here once, came back down, moved up, touched it once, two, three times before it now finally came down and then broke it. So sometimes price must touch that zone about 3 to 4 times before it's actually gets broken. And then it's also very important that you trade with the trend. Understand? It's one of the basic rule in forex trading. You have to trade with the trend. The trend is your friend. If the market is generally an uptrend, all your trades should be buy. You should be buying, should be buying, should be buying. How do I know that a market is an uptrend? And this actually should be our next topic, but let me just say it now. If a market is making is as let me just give it to me in a more general sense. For instance, now this market is pointing upwards. This is a particular example of an uptrend. Okay, when we actually in this topic, I'll give you the general term for an uptrend and the general term for a downtrend. For today, this market is generally pointing upward. So this market is actually a bullish market, an uptrend market. You understand? But if it was a downtrend market, sorry, it will look like this. Okay, let me look for a hair. This actually is a downtrend market. You can see that the whole candle here is facing. downwards. So this is actually a downtrend market. You can see this line is facing down. This actually is a easy way to actually identify an uptrend or downtrend. You can see this line here, this blue line here, it's facing down. But if you get to this position here, sorry, you see that it's facing up. So it's also good. It's always good to trade an uptrend. So if an uptrend is happening, I'll be looking for buys, entry, buys, not sell, buys, entry. So I'll be waiting for market to come hit a support zone, and then I will buy. Okay. If you're looking for a resistance zone, it means you're selling. If you're looking for a support zone, it means you're buying. So I hope this is clear. This video is getting too long, so I'll just stop here for today, and then tomorrow we'll talk about uptrend and downtrend. Today it's all about support and resistance. I want you to go and research more about it, gain more insight about it, and then hence it's something about stop loss. Your stop loss should always go below a zone. You understand? When I was trading this my trade here, my stop loss went below the zone. Your stop loss is actually more safe below a support and resistance zone. Why? Because those zones are zones that stop price from either going up or coming down. So it's safe, it's very safe for you to put your stop loss below zones. If it's below zones, it is actually more safer than when you just put it anywhere, any random place. If it's any random place, you're gonna get hit always. So you're gonna get hit always. But if your stop loss is below a small resistance zone, you actually have more accuracy. Like you have more degree of safety in the market than just putting your stop loss in a random place. So always put your stop loss below support or resistance zone. If you're selling, it should be above a resistance zone. If you're buying, it should be below a support zone. And like my own percent, it's below a support zone. So basically, that's why when price, you see what happened when price was coming down, it was close to hitting my stop loss. You can see it here. So it was close to hitting my stop loss. Look at price, almost hitting my stop loss, but it didn't hit it because it was below the zone. Now imagine if my stop loss was somewhere above the zone, it would have easily hit me out. You understand? So because my stop loss was below the zone, price came to that point, but it could not hit my stop loss or cut me out because my stop loss was below the support zone. So very very important that you always put your stop loss below a strong support and a strong zone. Not go and put your stop loss using 5 minutes time frame zone. You have to use a higher time frame zone in order to get good high probability of success. So thank you. See you in the next video. Please ensure you subscribe and comment, ask your questions.